the quotes from that article are just damning. Here's one. None of the discoveries made in the last 10 years have entered the list of the largest 30 gold discoveries. So from 1990 through today, all the top 30 gold discoveries have not yielded any more gold.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. Today we're going to be talking about central banks are in the news discussing the virtues of owning gold. And a report about a month and a half ago, 2 months ago, on gold mining's problems. I think it's a good follow-up after our discussion yesterday on silver to go through this. So we'll go through those two things and much more, actually. Before we do that, let's go through the markets. The dollar is 103.29, up almost 7. 10-year yields are 401, down 2. The S&P 500 is 58.21, up 6. The VIX is 20.74, unchanged bid. Gold is 26.77, near the highs of the evening, up 15 and change. Silver is 31.86, up 36 cents, leading the way, but holding back right now, let's say. Above 31.50, it looks pretty good. Copper, 436, up over 4 cents. That's an important piece of the puzzle for silver. WTI is 70.82, down 64 cents. Natural gas is 237. Soft side of unchanged. Bitcoin is 68,000 and change, continuing to ramp on a breakout of a channel, up 1.4%. Ethereum 2627, lagging but still doing okay. Palladium 1017, up 4 and change. Platinum 993, up 6 and change. And the grains are mixed. Seems like it's all about wheat now. Whatever wheat does, they do the opposite. Soybeans and corn tracking each other, up 5 cents and up 2 cents at 10.05 and 3.95. And wheat is 5.88, down 4. Grains are my hobby because I know nothing about them. And it's fun to come up with ideas when you don't know anything about something. All right, let's go with something that I may know something about. Yesterday, we read an article by a macroeconomist, a really good one, who happens to write for Bloomberg. And he went through a very good drill down on the difference between the 70s and now. Now, that wasn't his premise. His premise was to get to the bottom of the inflation. And he was talking about wage price spirals and how really I thought it was a very good article because it was a person who was working within his discipline to try and reverse engineer what the hell is going on since COVID. And I really appreciated it. And he talked about the main gist of the article, which I would encourage you to read, is he talked about in the 70s, you had a wage price spiral. Now we have a profit wage price spiral. And he was pulling out some metrics and some correlations to try and make sense of it, and he made pretty much sense of it. The thing that occurred to me was it's actually very simple. Companies are smarter now than they used to be, and so they're raising prices because they know inflation's coming back. So they're kind of making a self-fulfilling prophecy out of it. So anyway. It's a good article, and I suggest you read it. But there was a quote in there unrelated to this topic that we're going to talk about now. He says near the end, after being very, mellow about this whole thing, however, with early cycle-like liquidity coursing through the economy's veins and China unleashing what is likely to be its most consequential stimulus for 10 years, the odds of it happening are not nearly as low as the market is insinuating. He's referring to the reacceleration of inflation. Now, basically, he went through the whole article as he goes through and he says, this is what's happening. This is why it's happening this time. This is why it might not be that bad. But, however, and he goes through this. And I went, yeah, when's the last time that China and the U.S. Did something together? And I was like, that's right after the great financial crisis. And so I started to look at the charts. But before I got to the charts, I checked on Twitter, which is my habit. And lo and behold, in reply to something I put up, is Eric Young, my brother from a different mother in Hong Kong. And he said, the last time both China and the US flooded the system with liquidity, this is a complete coincidence, but it's fortuitous. The last time both China and the US flooded the system with liquidity in 2009, 2011, gold went from 700 to 1900 and silver went from 10 to 50. So you got the Bloomberg guys saying, wait a minute, we're about to start easing rates and China is about to embark on a big stimulus plan. And Eric says, well, last time they did that together, and we weren't talking about it in this thread. Last time they did that together, this is what happened. And so that's pretty interesting. Let's take a look at that in a chart. The yellow arrowed area is 2009, 2011. That's gold on the top and silver at the bottom. Okay, so silver went from, call it $14 to $50. And gold went from 700 and change. I cut it short. It should have been a little longer. 700 and change to basically 1800. I think he was actually giving it short shrift. So, sometimes it's so obvious that people can't see it. But this is what's happening. We're about to have a liquidity rampage in markets. Okay. I didn't even want to talk about that today, but I was like, oh my goodness, how can I ignore that? All right. So we'll make quick work of this. All right. Front page, silver leading algo buying. That's a note I put out yesterday when I saw something in the market that made me think we're getting a little bit ahead of ourselves. And we did back off a little bit. There's the wage price spiral article that I talked about. And let's get right into the two things I wanted to talk about. Central bank buying more gold now. All right. Yesterday, Bloomberg noted, and we wrote a story about it. In a rare shift, central bank representatives from Mexico, Mongolia, and the Czech Republic openly discussed their interest in boosting gold reserves. Quote, with lower rates, geopolitical tension, in the U.S. election, we might see an increase in the share of gold in our portfolios, he said. That was the Mexican minister. On average, central banks hold about 15% of their foreign exchange reserves in precious metals, but that number is likely to go up as multi-currency plans continue to unfold. And there's the story right there. That's unlocked. There's nothing they're saying there that I disagree with. Always throwing a little water on things. Why would you cite the U.S. election as a reason to buy gold over the long term? Either he's talking his book and he's already long, or that's an excuse because they have other things that they have to buy it for. And they do. And that's the multi-currency. Next story. Peak gold. It's not my phrase. It's his phrase. The lack of quality discoveries in the recent decade does not bode well for the gold supply, period. Based on the latest monthly gold commodity briefing service, we expect gold supply to peak gold supply in 2026 at 110 million ounces, driven by increased production in Australia, Canada, and the US, countries that also account for most discovered gold. Russia's not digging for gold. They're just mining it right now, it seems like. Gold supply is expected to fall to 103 million ounces in 2028, resulting from a decline in supply from these countries. Now, I put in parentheses, barring tech innovations or discoveries, because that's really what drove natural gas lower over the years. Anyway, the headline of the story is something innocuous, like 3 million ounces were discovered last year, and there's going to be more, but it's not that good. But the quotes from that article are just damning. Here's one. None of the discoveries made in the last 10 years have entered the list of the largest 30 gold discoveries. So from 1990 through today, all the top 30 gold discoveries have not yielded any more gold. So, and another one, it does not bode well for the gold supply. And I read this and I went, oh, we're just talking about silver. Like now do silver. They never do silver, but you get the point. The silver supply is in the same boat as the gold supply, but there's a bigger hole and it's starting to sink. Anyway, analogy aside. There's the front page. There's some stories from the front page. There's the other thing we talked about. Let's move on to the data. The data is Wednesday, import price index, light week. At the premium, we have something I think it's interesting. UBS has a lot of affluent money. They have a lot of money. Okay. And they protect their clients in terms of what they put them in. And they're now rolling out commodity investing as an alternative to equities. Now, this happened a couple times over the last 20 years. And the last time it happened by them and Goldman at the same time, oil went from $25 to $50. Anyway, I guess what I'm saying is that banks that are a little bit ahead of the curve, like UBS in terms of their client base, they recommended gold 2 years ago, and they did not recommend commodities. Now they're saying commodities. So I think the whole world is going to go into possibly, I don't want to say super cycle, people throw that around, but commodities are going to come to the forefront again. Anyway, that's my impression. Okay, that's a bonus at the bottom. Let's take a look at the charts. All right, starting from the zoom out, we'll start with gold, we'll save silver. All right, so there's gold. There's that channel that Michael Oliver had identified as a monthly chart. And we're going to zoom in. See this area here? I'm going to take you to that area. All right, this is a 4-hour chart of that area. This is me talking tactically now. All right, there's the line. You're bullish, you don't care as long as it's above that line, right? And you're bullish if it goes below that line, just maybe not as tactically. Yesterday, the market started to creep up, and I identified, I said, well, I think the market needs to heal a little bit below here, but if it gets above here, then I don't think it's a problem to get to 27, 23 was my low level. And I'll tell you why I think that. Stretch it out for you a little bit here. This was the cap. How many times have we seen this? This was the cap. This is the accumulate, and that's the lid off. So I think above this line, that line is not going to be a problem. Now, mind you, we have to settle above this line for me to want to go home long, but I already have a long position. Not as long as I want to be, but I bought some a couple of days ago. So there you have it. That's gold. Silver is actually a little bit easier. Well, let's zoom out. So silver. There you go. There you go. So let's start with a UBS level. Above 2850, they're not concerned. So I drew that line approximately 2025, I drew it. And above 3750, Larry McDonald's Bear Traps report says $50 is no problem. So there you have it. That's your zoom out from two different perspectives. Now we'll come in to the daily and I'll tell you what I think. All right. See these two lines here? My first line yesterday I said was above 3150. I want to see it above 3150. Above 3150, 3250 should not be a problem. Okay? Because that's what we did last time. So 5 days, 3250. It's got to settle above 3250 on a weekly basis for me to say 35 is not a problem. So that's where I am. And we're in the process right now. Gold is peaking up against all-time highs, and silver is looking at 3250, which would be its all-time high short term. You follow? Now, another line that I want to draw attention to. This is my line, but I don't trade on it. If you were trading pullbacks, the market's going up. It gets ahead of itself, it comes back. It gets ahead of itself, it comes back. All right. So it's in the process of getting ahead of itself, and then it's going to come back. So no matter how you look at it, this line should hold on a relative basis going up to $35 over the next 4 weeks. The BRICS event is coming up. People are buying because of that. Shorts are covering, and there are plenty of new fund shorts in gold and some in silver. I mean, silver's got plenty of shorts to begin with. We know who they are. Anyway, that's it. I'm Vince. Gold's up 17, silver's up 39. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.